Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. In Monday's trading session, the US indices have witnessed a mixed performance. The Dow has ended higher for the fifth consecutive trading session. It has ended at levels of 39,411 with a gain of 0.67%, while the Nasdaq has slipped by over 1%. The S&P 500 has settled at 5,447 with a loss of 0.31%. For S&P 500, the zone of 5,420 5,400 will act as the immediate support, while any sustainable move above the levels of 5,490 will lead to a sharp upside rally towards the mark of 5,580 followed by 5,650 levels. Having a quick look at Brent crude. So Brent crude is oscillating in a narrow range of 85.45 83.95 levels since the last four trading sessions. Going ahead, any sustainable move above the levels of 85.50 will lead to sharp upside rally in Brent oil. In that case, it is likely to test the levels of 87.50 followed by 89 levels in the short term, while on the downside the zone of 83.80 83.7 will act as the immediate support. The dollar index, if we see, has ended at 105.48 level with a loss of 0.33% on trade on Monday. Going ahead, the zone of 105.20 105.1 will be the immediate support for DXY, while on the upside any sustainable move above the levels of 105.9 will lead to a sharp upside rally towards 106.40 levels. Coming to the update regarding Nifty. So in trade yesterday, the benchmark index Nifty opened with a minor downside gap but formed support near the 10-day EMA zone, that is the levels of 23,350 23,390 levels, and thereafter witnessed a recovery. It has ended the session at 23,538 with a gain of 0.16% and formed a small bullish candle on the daily scale. Since the last couple of trading sessions, if we see, the index is trading in the range of 23,300 23,670 zone, and it has formed indecisive candles. Any sustainable move on either side will lead to a trending move in the index. Going ahead for the day, the zone of 23,470 23,450 will act as the immediate support. As long as it is trading about 23,450, it is likely to test the levels of 23,700 followed by 23,850 in the short term. While on the downside, if we see that if there is any sustainable move below 23,450, it will lead to profit booking in the index towards 23,350 followed by 23,270 levels. On the derivative front, if we see, the June futures has ended higher by 0.24 and the cumulative open interest of the current, next and far series has surged by nearly 2%, which indicates minor long built up. Among the constituents of the Nifty index, if we see, 11 stocks have witnessed long built up and 14 stocks witnessed short covering rally, while 12 stocks have witnessed short built up and 13 stocks have witnessed long unwinding. For the June series, if we see, the OI, that is the put call ratio, is at 1.04 and the max pain is at 23,400. Looking at the option chain, if we see, 23,600 strike has significant call open interest followed by 23,700 strike, and on the put side we have 23,500 which has significant open interest followed by 23,400 strike. Now coming to the update regarding Bank Nifty. The banking benchmark index Bank Nifty has marked a low of 51,138 on Monday and thereafter witnessed a minor recovery before ending the session on a flat note. Technically, the index is in a strong uptrend and it is strongly outperforming the frontline indices since the last couple of trading sessions. We believe it is likely to continue its upward journey in the next couple of sessions, and on the upside, if we see, for the index, if the index is able to take out the levels of 52,000, the next resistance on the upside would be 52,600 followed by 53,000 levels, while on the downside the zone of 51,300 51,200 will act as the immediate support for the index. On the derivative front, if we see, the June futures has surged by 0.26% and the cumulative open interest has surged by 1.02%. Looking at the option chain, we see that 51,700 strike has significant call open interest, followed by the 52,000 strike, and on the put side it is mainly seen in 51,500 followed by 51,200 strike. For the June expiry, we have the PCR which is at 1.22 and the max pain which is seen at 51,500 strike. Now coming to the key market indicators, so if we see, the volatility index has surged by nearly 7% on Monday, closing above the 14 mark from a low of 11.63. It has jumped by almost 21% over the last 4 trading sessions. This pullback rally has pushed the index above its 5-day EMA for the first time since June 5th, 2024. If it sustains above the levels of 14.4, it is likely to extend the pullback towards the levels of 15. If we see the overall advance decline ratio, it remained relatively flat in yesterday's trading session. Looking at the key sectors, so we have Nifty Bank, Nifty Private Bank, Nifty Financial Services, which are likely to continue their outperformance. Nifty Metal is consolidating in a narrow range since the last couple of trading sessions. Any sustainable move above the levels of 10,050 will lead to a sharp upside rally towards the mark of 10,300. Looking at the FI/DI data, so both FIs and DIs were net sellers yesterday to the tune of 653 and 820 crores respectively. That's an end of today's podcast. Thank you for regularly listening to our podcast. Wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.